money in the bank. So, I want us to do an example. I want us to do a small illustration. I want us to do a small illustration. I want us to do a small illustration on those things. You just need to know how to post into the books of accounts, how to debit and how to credit, but never forget, you always ask yourself, what is the effect? What is the effect? What is the effect? What is the effect? So I want us to quickly do a simple illustration question. I want us to do a simple illustration question. I want us to do a simple illustration question, and then we call it a day. We call it a day. We call it a day. Now, we are told, now, write up the assets, and liabilities and capital accounts to record the following transactions in the books of G. Powell. In the books of G. Powell. So we record it in general ledger. We record it in the general ledger. We record them in the general ledger of G. Powell. Of G. Powell. Of G. Powell. G. Powell general ledger. Now we are told on 1st of July 2024 started business 2,500 in the bank. Pounds. So we are saying the bank. Now remember what we said. That the owner and the business are two different entities. The owner and the business are two different entities. When you put money in the bank, the money becomes into the business. The money belongs to the business. What the business owes you, we say it is called capital. What the business owes you is called capital. We say separate business entity demands that you record the books of accounts of the business separate from your transactions. And therefore, we are told that the owner brought into the business 2,500. In other words, the bank account received 2,500 from the owner. These are in pounds. 2,500 from the owner. 2,500 from the owner. Now, the money in the business increases with 2,500, and an increase in an asset, we debit the asset account. An increase in an asset, we debit the asset account. Then, capital increases. The amount the business owes the owner increases. The amount the business owes the owner increases, and an increase in capital or liabilities, we credit that account. So we credit this account 2,500, and then we cross-reference. Capital we say bank, capital we say bank account, and bank account we say capital account. Please mark, we say A/C. It means account. It means account. The first date is July 1st, 2024. 1st of July 2024. 1st of July 2024. You capture the date. And then you're told, bought office furniture by check, 150. Or bought office furniture by check. So you establish an account called office furniture. Account. And we are told, we are buying by check. Anytime we talk about check, it means through bank. We never got money from the office to go and buy furniture. We did a check. So the money was transferred from the bank. So our bank reduces, and our asset of furniture increases. A reduction in an asset, we credit the asset account. So we come to the bank and we credit 150. But office furniture is increasing. And an increase in an asset, we debit the asset account. So we come to office furniture and we debit it. And then we cross-reference. Office furniture, we say bank account. And in the bank, we say office furniture account. A/C. Then you get the date 2nd of July 24. 2nd of July 24. Then you're told, bought machinery 750 on credit from planters. Bought machinery 750 on credit from planters. We are not paying, but machinery is increasing. Our machinery is increasing. Our machinery is increasing, and an increase in an asset, we debit the asset account. We debit the asset account, 750. But we bought, but we never paid anything. We never paid anything. And therefore, we owe planters. The person who is selling us on credit, we owe that person. So we write his name, and we say planter, and we know planter's account is a liability account. It's a liability account. Our asset machinery is increasing, but the liability is increasing. An increase in the liability, we credit the liability account. So we come here and we credit the 750. We credit the 750, and then we cross-reference. And the planters, we say machinery account, and at the machinery, we say planters account. We say planters account. And then we get the date. The date is 3rd of July. 3rd of July 24. 3rd of July 24. 3rd of July 24. That's the way we do double entry posting. On 5th, we bought motor vehicle paying by check 600. The asset of motor vehicle increased. So we open an account called motor vehicle. Always check, do we have that account already established? If you have the account already established, you add on that account. You don't create every transaction. No. You add to that account. We don't have a motor vehicle account. So we open a motor vehicle account, and we are told we are buying by check 600. An increase in an asset. Motor vehicle, like we said in our balance sheet, is an asset. And an increase in an asset, we debit the asset account. So we debit motor vehicle with 600. Always ensure that you capture the currency. They are not cows, they are not goats, they are pounds. They are not cows, they are not goats, they are pounds. So we are buying motor vehicle paying by check 600. So our money in the bank, every time we talk about check, we're talking about bank. Our money in the bank is reducing with 600. A reduction in asset, we credit the asset account. And we say we are buying motor vehicle. So the corresponding account is motor vehicle account. At the motor vehicle, we say bank account. And then we cross-reference, we capture the date. The capture the date is 5th of July. 5th of July 24. 5th of July 24. 5th of July 24. 5th of July when? 24. 5th of July when? 24. 5th of July 24. 5th of July 24. Now, if we go to 8th of July, we are told, sold some of the office furniture which were not suitable for the farm for 60 pounds. Some of the furniture we realized it's not suitable for us. And we sold it for 60 pounds on credit to J. Walker and Sons. So our furniture is reducing. A reduction in an asset, we credit the asset account. It is reducing with 60. But we are not getting money. We are selling on credit. To J. Walker and Sons. So J. Walker and Sons is other debtors. J. Walker and Sons account. J. Walker and Sons account, and it's a receivable. This is money you're going to receive. One day, J. Walker will give us money, and because it is receivable, it's a current asset. So here, and because it's an asset, an increase in an asset, we debit the asset account. So we debit it. An increase in an asset is something we are going to receive. It's money we are going to receive. If it's a receivable, it's an asset. So we debit J. Walker and we credit office furniture. We debit J. Walker and we credit office furniture. So J. Walker, we write office furniture account. And at the office furniture, we say J. Walker. J. Walker's account. Please don't forget, J. Walker is a receivable. Is other debtors. Is a receivable. We are saying clearly, office furniture is not our stock. We are told very clearly, the reason we are selling it is that it's not suitable for the farm. It's not something we are buying to sell. But we bought something that we thought is not suitable, so we sold it. These are other receivables. 60 pounds. So we're going to receive one day. Now on 15th, the date for that is 8th of July. 8th of July 24. 8th of July 24. 8th of July 24. Then we are told on 15th of July, paid the amount owing to planters, 750 by check. Planters. We bought our machinery from planters on credit. We had not paid. Antipatia, he gave us the machinery, but we never paid for the machinery. He gave us the machinery, but we never paid for the machinery, and therefore now it's time to pay. It's time to pay. So our money in the bank will reduce. Our money in the bank is reduced because you are paying by check. You must always ask yourself when you are paying, are we paying by check or are we paying by cash? If you are told we are paying by check, it means you go to bank. If you are told we are paying by cash, you go to cash account. By this case, you are told owing to planters by check, 750. So our money in the bank will reduce with 750. Our money in the bank will reduce with 750. And a liability called planters will reduce by 750. And a reduction in a liability, we debit the liability account. So we debit planters with 750. And we say the date is, so we close reference. Here we say bank account. And the date is 15th of July. 15th of July 24. 15th of July 24. And we are saying Planters Limited. Planters account. Planters account. Planters account. Planters account. Now, then we are told, receive an amount due from J. Walker. J. Walker is now paying us. J. Walker is now paying us. We sold office furniture to him on credit. It became a receivable. Now we are receiving the money from J. Walker, and we are told we are receiving cash, 60. We are receiving cash. We are receiving cash. So we are not receiving money in the bank. We are not receiving a check. We are receiving cash. So you create a cash account. 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 And we are saying we are receiving 60 pounds from J. Walker. Always ensure that you are saying in their pounds. From J. Walker. So we say J. Walker account, 60 pounds. And the date, here at the J. Walker, we say cash. Cash account, 60 pounds. 60 pounds. And we are saying the date is 23rd of July 24. 23rd of July 24. 23rd of July 24. On that first, we are told, bought more machinery by check. Remember what I told you? If you are buying something that relates to a certain account, and you are doing it several times, you go to that account. You do not create another account. We are buying more machinery. We are buying more machinery. We are buying more machinery. So we will not create a machinery account. We will go to the old machinery account and we take it there. We are buying machinery by check, 280. Our money in the bank is reducing, so we create a reduction in an asset. We credit the asset account. We credit the machinery, the bank, but the machinery is increasing. Machinery is an asset. An increase in asset, we debit the asset account. So we debit it. Then we cross reference. Machinery, we say bank. Machinery, we say bank account. And in bank, we say machinery account. We say machinery account. We say machinery account, and we capture the date, 31st of July. 31st of July, 24. 31st of July, 24. Now, those are the entries for the month. Those are the entries for the month. Those are the transactions that took place in the month. Now, there is something at the end of the accounting period. We say that we close the books of accounts. We close the books of accounts. In other words, we go to the ledger and all the accounts, we close them. We close them. I always encourage students that the assets, close the debit side first. Close the debit side first. Because an increase in asset will debit the asset account. For capital and liabilities, close. Closing is totaling up. You total up the credit side first. So if we come here, please see what I'm doing. I am not drawing these lines along this line. I'm drawing them a bit low because it's something I'm going to record here. So we do it that way, we do it that way. So please see, at the bottom, I do double at the line. Double at the line. Now, I add the debit side first. I add the debit side first. And then the other side must get the same figure. The other side must get the same figure. What are we saying here? What are we saying here? We are saying At the beginning of the period, we had 2,500 shillings in the bank. Then we withdrew. We paid furniture 150. We paid motor vehicle 600. We paid planters 750. We paid machinery 280. Essentially, we are saying this is 750 plus 750. That is 1,500. 1,500 plus 280. It is 1,780. Now this is 1,780, but the figure. So we are saying that. Yes, 750 for this 15 should be 1,500. Yes, 1,500 plus 280 is 1,780. Now, 1,780, if you subtract 2,500, we are saying 10 minus 8, it is 2. This is 0. 0, 10 minus 8, it is 2. 14 minus 7, 14 minus 7, it is 7. So here we say the balance is 720. End of July, that 1st of July 24, balance carried down. We call it balance carried down. We are saying, this is what we are saying, that in the bank we had 2,500. We spent 150 by buying furniture. We spent 600 by buying motor vehicle. We spent 750 by buying planters. We spent 280 by buying machinery, and the money now we have, the balance of the money we have is 720. Is 720. If you go to our bank account, it doesn't have 2,500, it has 720. The money in minus money out will give you the balance. The money in minus the money out will give you the money in the balance in the bank account. Now, where the posting is only one, you just double underline that way, double underline, and then you say 2,500, then you say that the 1st of July 24, balance carried down. Please, we call it balance carried down. BALC/D. BAL, then C/D. We do the same here. We do the same here, 600. That the 1st of July 24, balance carried down. We do this one because the debits and the credits are the same. We double underline. We double underline. We double what? We double underline. Here, because they are not the same, we bring the figure to the other side and we call it the balance. That's the 1st of July 24. We say balance carried down. Balance carried down. This one, both of the sides are clear, so you just double underline. You just double underline. This one, you add them up. You add them up. You add them up. 8, 10, 10. So machinery we started with we bought 750, we bought 280. At the end of the period, the balance carried down, it is 1030. The balance carried down is 1030. 1030. So we come here. Please mark what we have saying. This line and this line are parallel. This line and this line always are parallel. They are always parallel. So that 1st of July, 24, we say balance carried down, it is 1030. It is 10. The difference between the debits and the credits is the balance carried down. The difference between the total of the debits and credits is the balance carried down. So you can see now, look at what I'm doing here, because this here I will need to have 2 entries. So I'm doing my totals a bit low. I'm leaving space to capture the balance carried down. So that's the 1st of December, of July 24. We are saying that 1st of July 24. We say balance carried down. 150 minus 60, it is 90. It is 90. It is 90. Now, office furniture, we had bought 150, we sold 60, the balance is 90. The balance is 90. 150, 150, 150, 150. Now, that's the way we prepare the postings in the general ledger. That's how we prepare postings in the general ledger, and you say it is called double entry accounting. Double entry accounting. Now, we are preparing ourselves for a massive intake in January 2025. Don't miss being taught by the best, the most experienced lecturers, very, very well trained, very well experienced. We have done this for the last 16 years. I can assure you, you join us and you'll be training with the best. We say that we guarantee success in our training if only you can follow our instructions properly. That's all we had for today. There are very many other classes we're going to do, but kindly ensure that you subscribe, you like, and please join us in January. We will be training online. Join the rest. You know, we have had a traditional way of training that you have to be closed in a house. No. That you have to be forced to stop working. No. Today we are training you right where you are. We guide you how to book the exams. We guide you in everything. Thank you very much. See you next class.